Good morning and welcome to Saxo Bank's morning call on Friday, the 16th of November. And what a day we had yesterday. A shocker. It came after the cabinet, May's cabinet in the UK had made an agreement with the EU, and then just, basically hours later, we had the UK Brexit Minister Arab resigning, and then after that we had even more resignments from the cabinet, and what we had was ramifications in the currency market. We had the British pound falling against the euro. We also had waves coming through the fixed income market. Not so much action in equities. We'll come back to that. But if we go to the chart, you can sort of get an idea of what the move we saw yesterday, because this is definitely a new development in the whole Brexit. The market is definitely pricing in a no-deal scenario at the current. There's a lot of Tories in the party that are against this deal. They're trying to mobilize votes also from the Labour Party to make this deal not go through Parliament. And as you saw in the chart, it was a very big move in the spot, sort of stabilizing this morning. But Matthias, we're also seeing big moves in the options market on British pound. What can you tell us?
Yeah, so we see big move in volatility yesterday. So 1 month cable was up to 15.5, and that's where we start today in the morning.
Yeah,
and that's basically levels that we saw just after the Brexit vote.
If we go to the chart, we can sort of see how big the move is in the risk reversals.
Yeah, so we also sterling puts again. It's a huge bit for puts for the downside in cable. And if you look at the left chart, the blue line is basically the term structure for where we're trading today, with the 1 month up at 15.5 compared to where we were a month ago.
Yeah.
And 1 month traded around 9.5. So big move in volatility and a lot of uncertainty now in the short term. We have no confident votes against May. Do we have it or
exactly
not? And will we get more resignations from the parliament? So a lot of uncertainty and really high volatility. So I think we will see a lot of headline-driven market now for the next couple of days.
Yeah, and you also saw the nervousness, because the market is definitely pricing in a very uncertain environment. And you had the Royal Bank of Scotland tumbling 10% yesterday, because now there is nervousness that maybe the Labour Party will take over, and the Corbyn scenario is not something the banks and the financial sector is really liking here. But someone got burned, I think, in the options market yesterday from that move. So, but Althea, we also had quite a move in the fixed income market. The gilts were bid, right?
Yes, absolutely. So investors obviously were flying to safety, and as we can see in the graph that we have here, we have opened the close of the day before was a gilt yield of 1.5%, and yesterday we closed at 1.37%. So it was a fall of 13 basis points, which is not surprising in this kind of context. The real question is what is to follow. Like we said on Wednesday, the gilts have been trading between 1% and 1.7% since after the Brexit vote until today. So of course, if there is going to be a deal, we can see the gilts yields going higher, because obviously the market is going to be more risk on. But if the current uncertainty scenario drags on, we can expect the gilts actually to go lower.
All right, and if we look at the equity market, I have a chart here on the FTSE futures. You can see there was very little action actually yesterday, and that was despite the big move we had in the currency. I've been saying almost since we got the Brexit vote that I have been steering clear of UK equities. I think the opportunity set in global equities is so interesting that there's no reason to take the exposure in UK equities unless you do some very specific selection in among the mining companies or banks for specific cyclical exposure. But otherwise, I think people or investors should stay clear of UK equity exposure at this point in time. Elsewhere, we had a small rebound, or almost a 1% rebound in US equities yesterday. That this positive sentiment have carried over into the Asia session, and I actually have an Aussie dollar chart here because I think the Aussie dollar is probably the best proxy we have on what's going on the ground in China. And as you can see here, we have the Aussie dollar still banging on those highs from earlier this month, but also from back in September. And if you compare that with the Chinese equity market, it sort of suggests that we could have some more upside in Chinese equities, and they have actually been rising now for 4 straight days. So it seems like some momentum at least has been building, and it makes sense given the massive stimulus that have been coming in the Chinese economy from the government. Talking emerging markets, Althea, there's also was an event yesterday in Mexico, and things are happening. And it's a very volatile segment right now, the emerging markets. But specifically in Mexico, we had a rate hike, and you have some thoughts on the bond market as well.
Yes, absolutely. So we have a graph here, and as you can see, in blue you see sovereigns, total return of Mexican sovereigns, and in red instead the total return of the average of the other emerging markets. So the take here is that in the past 4 years, Mexican sovereigns have been performing better than the average of the other emerging markets. And the bigger real question here is this going to be sustainable now that in a couple of weeks AMLO is going to take the presidency in Mexico? And as we have seen in other countries, such as in Italy, this new president has populistic point of views of the economy, and we believe that he's going to clash with the policies of Trump. What actually keeps me up at night is the AMLO's supposed reform of the energy sector.
Yeah.
He want to call a referendum in order to abolish the reform that was done in 2013, which basically ended the monopoly of Pemex. And another thing that he wants to do is basically stop importing gasoline from the US. So obviously, all these fact makes me think that there is going to be a clash with the US, and Mexico has been performing well because the policy had been in line with the US until now. So this thing can obviously blow up.
Maybe we should get you in the studio next week again, Matthias, to talk a little bit about the volatilities in the Mexican peso. It seems like there is a story developing there.
Yeah, but it's volatility-wise in Mexico, we're still trading high.
Yeah.
So it's a volatile market in the FX as well.
Yeah, especially also with the potential confrontation with Trump going forward. Talking a little bit about single stock news here, we had a very much anticipated earnings release from NVIDIA. I wrote about that on Monday in my earnings watch, which is the preview of the earnings releases to see or to watch. And as you can see here on this chart, we had a very disappointing Q3 earnings report from the NVIDIA. In the aftermarket, we closed sharply lower compared to the close in the cash session. And you can see the red line is where we ended in the aftermarket compared to the bar to the right of the chart. So big move there, almost 10%. The disappointment came from an overhang of inventory of chips used primarily in the crypto market, but also there was softness in the graphics segment of NVIDIA's business, and the investors were quite disappointed. This is one of the most richly valued stocks out there. So obviously, when they miss against expectation, you see big moves in the stock price. I just want to reiterate my view just quickly on this chart here on semiconductors. I said it on Monday, as you can see here, the direct quote. Get out of global semiconductors. You've been riding a profit boom over the past 2 years because of crypto and related data center growth, also growth in artificial intelligence that use a lot of these chips. My main point is that the global semiconductor industry is the epicenter of the trade war between the US and China, and there will be disruptions in the supply chain and potential profits going lower from here. So take your profits if you have exposure in semiconductors. We've been saying it actually since February this year. Before we go to the calendar, we just have to finally comment on the oil market. Ole is not here to join us today. He will be in later though, so he will probably comment on home.saxo. But if you look at the chart, you can see that the WTI futures are now rebounding from their lows just south of $55 per barrel, and you actually had the most oversold period in WTI futures in more than 20 years. And I just looked at the US energy sector from an equities perspective, and I think the calls look quite attractive from a risk reward perspective. So there might be a trading opportunity there if you dare grab the risk. In terms of the calendar, there's no major events today. We have a final CPI print in the Eurozone for October at 10. I don't expect much movement there. We have Vitamin to speak at 1300 GMT. Potentially there could be some movement in the euro there, but I don't expect that to be a major thing either. Risk events for next week. We have Carney to testify on Tuesday. We also have trade balance data out of Japan that could move the yen. Otherwise, there will be some couple of CPI prints as well from Japan, and we have the flash PMI from Eurozone on Friday, which I think could be quite important. We know there's been a lot of weakness in Eurozone lately, so watch that. Otherwise, we now have that Brexit summit date on November 25th. That's in the calendar now, and then everyone will be talking more about that, but that's the G20 meeting on November the 30th. That is the key event for markets, whether we can see a sustained rebound in December or we will continue to fall in risky assets. And that concludes today's morning call, and we'll be back on Monday, same time and place. Thank you.